Welcome to our May Hot Stock panel. My name is Glenn E. Tompkins Jr., Esquire, DDS, and no, I'm not a real dentist. I'm glad to be here, glad to have you all here. If you can hear us and see us, by all means, please respond in the chat to let us know that everything is working well. VectorVest, if you're new to the VectorVest software, the VectorVest program has been around for 30 years, over 30 years, with the purpose of helping to make our subscribers better investors in the market. It's got a lot of flexibility, some of which we'll talk about today, but primarily we're going to be talking about good bargain, big bargain stocks to take advantage of. What is the word I'm looking for?
Blue chip bargains.
Blue chip bargains, there we go. Ideally for the longer term investor, this hot stock panel is going to be tailored toward you. Our hot stock panel, every month we have one, and every month we have a different theme, whether it's for bottom fishing, whether it's for swing trading, whatever it is. But this is the place to be if you're looking for ideas, and every month we come up with 10 ideas. You get to hear from 4 different top level, as Joey says, top level instructors to help you to make some decisions on those. Today, I have, along with myself, Jim Penna, the manager of the Ultimate Retirement, or retirement in and of itself. I have Patrick France, who is a senior instructor here at VectorVest, and Todd Schaefer, who happens to be one of my best friends and my buddy. He is the manager of research. Now, Jim is looking over there. Jim, you're a good friend. Patrick, you're just an acquaintance. But
that's fine.
I just put that out there. And
I'm not your acquaintance, pal.
In the background, we have Joey. Say hi, Joey.
Hi, Joey.
He's our producer. He's with me on Trending Thursdays every Thursday in the background to help me to look good. All right. And don't forget, if you're new to the channel, please subscribe to the channel. We'd love to have your subscription. We're going to start off a little differently because we are looking at long-term stocks. I think the highlight of the afternoon should be placed on our manager of retirement. He is going to take the forefront in this week's or this month's presentation. I'm going to start off with Jim. Jim's going to introduce himself, and then when he's done, he's going to pass it back to me, and we'll keep this going. Take it away, Jim.
Thank you, Glenn. Thank you, Glenn. Thank you all for taking the time to be here. Again, for those who may be new, my name is Jim Penna. I am the manager of retirement services here at VectorVest. Been here for about 14 years now, and prior to that, I'm, as a lot of you know, I'm from the Connecticut, New York area. Worked on a trading desk as a market maker for a long time, and even prior to that, I was a police officer in Norwalk, Connecticut for just about 10 years. So for those who are new, that's my background. What I wanted to talk a little bit about before we get started with our stocks is, again, the concept or the setup of what we're trying to do today. We decided that the concept would be more of, Glenn used long-term stocks, and we can look at them that way, but really it's more of a blue chip type of stock. Now listen, you can day trade blue chip stocks. It doesn't have to be a $2 unknown stocks to day trade. That's not what we're going to talk about here today, but just so you know, we're looking at good quality blue chip stocks from a list of searches. So again, as kind of a setup, we're going to get into a watch list that was created, and I just want to make sure I get the searches right. We used ruler stocks, premier growth stocks. We used the search worry-free winners with no moving average. That's for people who don't have ProTrader, just so it's a built-in search for you. And also we used, did I say premier growth stocks?
Yeah.
And we took the top 10 from a watch list called Blue Chip Bargains. And we created a master watch list, and then the 4 of us each went through that watch list, and we picked a few stocks each to kind of analyze and go through today. The great thing about the watch list that's going to come up, it's from a search or a series of searches that are all quality searches. I don't know that there's a stock on the list that I wouldn't consider at some point owning or doing some type of options trade on. So it's a great list of stocks, a great master watch list, and I just wanted to begin by kind of setting up, because it's a little different than the way we've done things in the past. Again, the idea being good quality, high relative safety stocks. And as far as the retirement-minded side, as you guys know, we haven't made it to that confirmed call yet, to the upside. We almost got there. I think it was April 29th. We almost got there. The buy-sell ratio tried very hard to get up above 1, but it just couldn't. And this is the reason why we wait for the confirmed up call for that most sustained uptrend before we get into our retirement stocks. So I just wanted to take a second to set that up for us. And then I'll go ahead and begin, Glenn, I guess. We'll
Yes.
take my stocks first. All right, what we'll do is we'll go in to the watch list that I was talking about, and that would be here in the Viewers tab. I'm going to break this down so we have some extra room. And what you see here is a list of 36 different stocks. So one of the great things about this is we took the top 10 stocks from 4 different searches, and we still have 36 individual stocks, which means there was only overlap for 4 of these searches, which I thought was pretty good. So we then highlighted, before we got started, the stocks that we want to kind of analyze each. And I think when I right-click, will I unhighlight them? Well, we're going to find out. So I'm going to walk through my 3 stocks first. We'll put them up on a graph, and we'll take a look, and we'll all kind of comment on them. I'm going to start with Cigna. It is down today. Cigna is near the top of the list. We currently have these. How do we have these sorted? Oh, by symbol.
By symbol.
Okay.
You can sort it however way you want it.
We'll sort it. Well,
Relative
we'll start
safety is
with
enough, yeah.
RS. So we'll start the sort by relative safety. ODFL, I did uncheck them all. That's what happens. That's right. We know which ones we want. The graph should still be there, though.
Yeah, at the top. Yeah.
So I'll start with we'll go back to symbol then. So I'll start with Cigna. This was my first choice. It is down today. Just going over the preliminary walkthrough that you would do on any stock is bring it up into your watch list or into your Viewers tab. Relative value and safety, obviously fundamentally sound company. Relative timing is very strong. And the comfort index over time has been pretty good. But here's what I talk about all the time on the high RS stocks is what we're looking at. When you see numbers like this in relative safety, generally speaking, there are exceptions, but not many. All of the other numbers we care about are going to fall into place. So with a relative value at 158, RT, of course, can fluctuate depending on the market. Earnings growth rate at 26% earnings growth rate, and that's percentage per year. So a very strong stock. So the preliminary look at it is clear that it is a blue chip bargain, if you will. If I slide over to the right here, the next thing I want to make sure is that I'm in an industry or a sector that I can analyze and get a good sense of where that sector is. Now, healthcare industry, talk about that as we go through. I think there's a couple of healthcare stocks coming up. This one happens to be healthcare HMO. So if we'll scroll back. If I go to the home page, one of the ways that I went through this list to pick the stocks that I wanted to do was going at the top RT industries. So if you look up here, the second ranked industry in real time is healthcare HMO right now. Now it has ticked down a little bit today, but I know I've got a stock, a rising stock and a rising industry to start with. So that's where we want to begin. We're going to have to do this separate because we lost, I think, all of the graphs.
Oh, it might be put down. What's the word I'm looking for?
Minimized?
Minimized.
Detached?
Go down to the bottom. There you are.
There we go. Okay, great. Thank you. So I'd have to go back, though. I still don't have CI.
You can scroll up or down.
There we go. Forgive me, folks. The lighting in here, it's very hard for me to see the screen, so I am getting old. All right, so we'll start with Cigna. So the way we've got it, and everyone will set up how they want to set up their screens here, but we'll start, because these are blue chip, high RS stocks, I'll start at the subgraph here for earnings per share, and we can see on a one-year graph the strong earnings and earnings forecast that we see. Positive, these are very strong earnings that Cigna has had. If we look at a graph, as you well know, I don't think you'll find a graph that doesn't have this type of drawdown from late February to, I can't see, but I'm guessing that's March 23rd or very close to it.
March 18th.
March 23rd was the day that the market bottomed, right? The overall market bottomed on March 23rd. So most graphs we look at are going to look like that. Now, since then, you know, the market has fought its way back. We haven't necessarily had that V-shaped correction that we might like to see, although it looked like we wanted to, but now the market and the stocks, as you can see, are kind of moving sideways. So what we have is a stock right around support resistance here. I'm really not looking too closely at that on this particular stock. What I'm looking at is the industry, the current conditions in the current market that we're looking at. So healthcare sectors and industries has been something that I've been looking at. And so Cigna made the list here for these type of stocks for what I'm looking at. Again, the graph, it is a buy-rated stock, I believe, at this point. Down a little bit today. Above its is that a 50-day moving average?
50-day EMA.
And we do have support at whatever that number says that I cannot see. So that's a stock, that's a blue chip bargain in an industry that is number 2 out of what, 221 industries currently. Not that we're looking for dividend payers here, but I believe the stock also does pay a dividend. And that's my first pick, is Cigna, based on those factors. So, Glenn?
All right. So the thing I like about the stock is that it's in a rising industry. That's huge. All right. The graph may not look all that pretty right now, but the power of an industry, Todd does this a lot. The power of an industry is can be very pertinent for an individual stock. And if the industry is rising, why? Because the stocks within the industry are rising. So I'm thinking that the rising industry will be really good for this stock. As far as getting in, I'd like to see it break above that most recent level of resistance, let it get out of its own way, then challenge going up to the high. The stock is a buy. It is above the 50-day. Earnings looks good. You always want to buy into a stock that has, let me ask you a question, that has rising earnings. So it's pulled back a little bit, but really leveled out. That's what I like. I like that it's in a good industry or a rising industry. I'd like to see it take out that most recent level of resistance. Patrick? Or Todd, sorry, then Patrick.
Yeah, I like the industry sector play. In fact, I have a pick from the same industry because it is hot. Just about all of these stocks have done this consolidation with the market. I like how this is holding the 50-day, and the support level right below it gives me a nice little safety valve. And I'm kind of waiting, like you, Glenn, I'm waiting for the breakout. Let's see what the market does also, right? We're in this little consolidation on the market as well. So if both break, then that's my entry and living large.
Yeah, just real quick, one thing I did fail to mention, and Todd's right, you got to have the market aligned as well. And I didn't really get into that, but before you buy any of these, you have to feel comfortable where the market's going. In retirement, we use the confirmed call as our entry levels for all of our portfolios. So Todd makes a great point that I missed and just wanted to reiterate that. Patrick?
So once again, you know, really need to wait for that breakout above 200. Get some follow through with it for, you know, a good consistent long-term entry point. One thing that I didn't like with it was the flattening of earnings. You know, they were going up for so long till beginning of the year. Then since that point, they've dropped a little bit, if not just moved sideways. Now, you know, granted, it's a good company, still making money, but I'd like to see earnings still continuing to rise the way it was before.
That's got big earnings, though.
Yeah. I mean, yeah, the company's still making money, and they're expected to make money, but it just kind of is a cause of concern or something to keep an eye on as if you're into this stock, to keep an eye on as you move forward.
Yeah, you're still within 10% of that high, but if you started having a dramatic pullback, then I'm right with you. Right? They seem to have stabilized. Let's see how we do in the new economy.
Yeah.
Well, the entry point to me and to both of your points is this isn't a swing trade, so I'm not waiting till it gets to 201 to purchase it. I do understand the essence of the buy stop and waiting till it breaks resistance. If I was swing trading it, I would certainly probably do that. I'm looking more, you know, again, it depends what your objective is. If you are short-term trading this, yes, you'd want it rising in price, probably just hitting a new high, maybe day over day or whatever it might be. But the goal really isn't looking, you know, I'm not going to wait till 201 to get into this stock, I guess is my point.
Well, the only reason I say that, though, is because from a longer-term outlook, you're at a lower high since the high back around the middle of February. And, the unknowns in the market and unknowns in jobless claims and all the stuff going on.
Well, right, we could say that about any stock we talk about buying. So that's kind of the overview.
That's why I'm looking at a solid number to make sure I'm still hitting higher highs. I'm not reaching a level of resistance at 200 and then start to make a second dip. So that's why I say wait for the breakout.
Yeah, I think you're both making good points in that on the entry, I may play a faster kind of trader's entry to make sure that the short term is driving, and supporting the long-term trend. But I'm not, right, am I going to put a stop in at the prior pivot or support? No, it's a longer-term hold. I'm going to give this thing more room to play. Maybe I'll even build the position instead of going all in. Right, it's a different kind of approach.
All right.
Yeah,
Let's
okay,
move on to the
great.
next one.
So let's scroll down. My next stock was going to be Docusign. So I don't think we'll have any complaints about the technical views of this and the price movement of this one, so we'll leave that part out. And Docusign is just based, again, software business was one of the higher ranked industries. I like the industry, I like the movement of the stock. Again, from a technical standpoint, relative safety. Now, here's a little different. Here's one of the exceptions from the searches that we picked up on. Honestly, I'm not sure exactly which search Docusign came in on, but this is one of the rare stocks that you'll see me talk about, and if you look at the relative safety number, it is actually very low. However, the earnings growth rate on the stock,
I think you have to add it.
I'm just sorry, I just can't see
right
the
there.
screen. There it is. So the earnings growth rate on the stock is
47.
47%. That's the earnings. That's earnings growth in percent per year. So that's another reason. So that's more of a technical look. Buy-rated stock, highly ranked industry. So that was that pick from our list of 36. So not a lot of thought went into that one. Just looking at a nice graph and a huge earnings growth rate.
I'm with you on that. We always hear that the graph is the dimmer behind the stock. Oh, it's the DMA. Oh, okay, never mind. That the graph is the dinner. I'm always hungry.
Dinner.
I'm hungry. Anyway, we just came from Chick-fil-A too. That the stock graph is the DMA of the stock. That's telling a beautiful story. It's moving, it had some hard time getting out of bed for the first 3 months or so, but since then, riding that 50-day moving average. Of course, we know when coronavirus hit, the stock hit. But this is one of the more resilient stocks in the database that didn't seem to get hit nearly as hard, and the stock getting a sell recommendation was just for a small amount of time before it was resilient. I bet you CI on this stock is probably really darn good. That stock's price has just been rising, got back above, challenged that level of the moving average, went back up, now hitting a new high over the last year.
Yeah.
I like everything about it. There's the CI. CI is at 1.68, but the graph told me that without even having to look at that. The graph told me that without even having to look at that. I love it. Todd?
Yeah, you're almost in trader's world here, aren't you? It's a nice, pretty price pattern. I like how we went from loss into gain in fall of 2019. Hanging on for the market correction here, right? Still hanging on to some earnings. They seem to be plateauing here. And the market still likes them, obviously, right? Coming up sharply off of that low. So there's a lot to like there. I'd be in particular for the longer term hold, maybe look at sales growth, make sure I have some top line performance, but other than that, that's an easy entry. Maybe getting a little overextended at this point.
I was just going to say, I know you can make the argument, right, it's too far away from that moving average. And so where's the right time? Again, these are choices not made with that swing trading mentality here. Just a good quality graph pattern over a 1 year. Earnings are rising. And again, I don't want to say it on every single stock, but it's the market trend, it's your bias on the overall market that's going to determine when you actually enter in. My recommendation, unless you are swing trading, is to wait for a confirmed up.
Yep.
And make sure you've got prudent stops in once you're in.
Patrick?
I like it. Nice steady pattern, bottom left to upper right, both on price and earnings. I like the fact that how resilient it was through the pullback in the market. Yeah, I mean, technical and fundamental both look good on this one. So, yeah.
Yeah, I like it for a covered call trade too.
Okay.
If I just wanted an income trade. Okay, great. Let me get through this because I got one more, and it is. Where are you?
I don't know.
Maybe.
You got the mouse.
Of course, it's at the top, right?
Is it at the top?
It's gotta be.
Way to go, Jim.
There it is. So another one. This one is
Repligen.
Repligen, RGEN, not to be confused with what is it? Regeneron, REGN. But it is a biotech stock. Again, from clearly on the graph pattern since the low. I'm ignoring all of this because, as I said already, every stock's got this. But we've got new highs. Again, from a point of view of from a technical standpoint and from a fundamental standpoint, you've got a stock with a relative safety. Well, first of all, CI is very strong. Relative safety is, what is it?
1.42.
1.42, which you don't see often. The other great stock on that list was Vertex. Could have easily chosen Vertex over this one. Both are very high relative safety stocks, which you don't always see on these type of biotech stocks. So I thought a great stock here. And also, I don't want to lose the screen, also I believe in a top industry here as well. So this one was another kind of easy choice from a technical view and from a fundamental view and from what the current environment is on biotech stocks. So again, a pretty easy one to choose from that list. I said it earlier, I can qualify. I can make an argument for all 36 stocks on that list to put into a portfolio, assuming we enter at the right time. And in my opinion, right now is not the right time to enter into these.
All right. Real quick, before Patrick goes, 1, 2, 3 strings. 1, are you a subscriber to the software? And if you are, we give information on how we look at relative safety. Relative safety looks at the consistency and predictability of a company's financial performance. Now, you may or may not agree with the picks. That is your decision. But the software has been around for over 30 years. We've been helping our customers make money for over 30 years. These indicators, these proprietary indicators, have been working for over 30 years. That indicator looks at the consistency and predictability of a company's financial performance, but bigger than that, it's looking at how risky the stock is. So we do disclose what needs to be disclosed as far as we can without giving away the proprietary factors. All right, so again, it's a very good, well-based indicator that works out extremely well for people who are looking for stocks for the long term. All right, Patrick.
So with this one, isn't this one the biotech company that has something to do with the coronavirus vaccine or
I think that might be Regeneron.
I think that's REGN.
Yeah,
okay.
I think it's the other one.
Yeah, I mean, earnings look good. Getting a breakout to a new high today. Today maybe a little early, but if it can hold those highs, that's a strong sign that people are still willing to pay that price for it. So, yeah, I like it from a technical standpoint, and you have a nice steady rise on the graph, nice steady rise in earnings. So, yeah.
Wow. All right. Am I yelling? Sorry. If I'm yelling.
The whole tone of voice changed. Kind of weird. Right?
Listen. If I'm yelling, get over it. All right. You know me. I'm going to do what I do, and that's what I do.
Right. Those are my 3 stocks. I'm going to pass it over. I did have an honorable mention. ODFL. Totally different industry sector. ODFL was on that list. Looked great as well. That's my honorable mention. And John said hello from Norwalk, Connecticut. John, it's scrolled through, but hometown, go Senators.
Oh, well, whatever.
Yeah.
I almost picked
Whatever.
ODFL.
Did you talk about that stock? Why did I
didn't.
just go
The one
straight
thing,
to
the one thing I
Penna?
noticed is it's done this pattern a couple times. If you look at it, where it gets overextended, has a sharp pullback into the low, and then it's done that twice on this graph, and maybe setting up for a third one, which may be okay if this is your long-term play. Accommodate that, right? So
The only thing I would say is
Have a loose stop.
I'm not going to put a technical label on this because that's February to March. So every stock has done that for that one. So yes, it did do it here. I'm going to give it a pass on that one.
yeah, my point isn't that I'm not going to trade it. My point is I'm going to accommodate that
Who's next?
moving into the future.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.